Hey everyone, it's Rodney Leandro here, and today I'm bringing you a video about the basics of Forex trading. Now, the aim of this video is to teach the average person who doesn't know anything about Forex or who knows some information about Forex, a bit more information to give them a good understanding of how things work and, how one can learn how to trade if they are open to learning a skill set that, really does pay and one that you can do from your house. If you do have any questions or if you do get confused, hit me up on my Instagram, mastermindr_. Any questions, any if you get confused, just hit me up, send me a message. So these are some of the realities. The first thing you need to understand is that Forex is not like education and not like having a job. With education and with a job, if you make mistakes, it's bad. In education, if you make a mistake, you won't get the grade, you will fail. In a job, if you make a mistake, you may not be able to have that job for much longer. You may get fired if you make too many mistakes. But within Forex and also within business, the learning is in the failing. First attempt in learning. You will learn what not to do very quickly and effectively by failing and reviewing your failures. Success is a poor teacher when it comes to investing and when it comes to business. So this is something you really must understand. You must do the learnings in the doing, you must do the learnings in the failing and reviewing that failure. It's also good to have a mentor and a support system to kind of reduce the time it takes for you to learn and to reduce some of the failure. Your mentor, somebody that has gone where you want to go or has the results that you want, so they can tell you what they've done so you can too do it and have the same results. And it's going to take you about 60 to 90 days for you to grasp, what Forex is, start seeing results, start having a strategy that you can use. And do not trade with money you need for bills or life expenses, because Forex is something where, as I'm saying to you, part of the learning and the process of you being successful is failing and losing money. So don't trade with money that you can't afford to lose. If that money was meant to be for rent or if it was meant to be for some sort of life expense, do not use it. Try and find a way to, save some money or make another income stream so you can then invest into your Forex account. It will also help you be more calm and clear in the markets, not trade with fear. And, it will make the whole process a lot more easier and a lot less stressful. Stick to one strategy until you get it, and only change it if it does not complement your lifestyle and schedule. So if one of the strategies you're using means that you're on the charts too much, I highly doubt any would be. But let's just say there was a strategy that meant that you're on the charts too much, or you're trading late at night, or you're trading in a way that doesn't go with your work schedule and your lifestyle, then change it. Change it. Forex can be learned by anyone. It isn't for mathematicians or economists or people that are smart. It can be learned by anyone. It's just like learning how to drive a car. So there's a picture of the cone of learning, and that just explains what I've been saying, that 90% of what we learn effectively is from doing or stimulating the real thing. And you can actually have a demo account in trading as well whilst you're learning if you don't want to risk your real money. That's something that you can do. Have a demo account. It's the real market, it's real trades, it's just not real money. Now, we're going to move on to lot sizes. Now, lot sizes determine how much you will make or lose from a trade. And pips, basically, pips is how the market moves. So in terms of a currency against the other, how many points the market is going to move is known as pips. How much the market has gone up, how much the market has gone down. So for this example, we're saying that you've caught 70 pips. If you was trading with a lot size of 0.01, that's 10p per pip, you would have made seven pounds by catching 70 pips. If you're trading with a lot size of 0.1, then that's £1 per pip, you would have made 70 pounds from that trade. If you're trading with a lot size of 1.0, a standard, that's £10 per pip, you would have made £700. So it's not about the amount of pips you're catching, as you can see. It's about the lot size that you're using. And you only want to risk 1 to 2% of your account to make sure you have good risk management and you don't blow your account and you're not gambling and over leveraging or risking too much. So if you only have £100, you want to trade with 0.01. If you have £1,000, 0.1. If you have £10,000, that's when you can start using standards, 1.00. Hope that makes sense. And with risk to reward, you want to put the odds in your favor. Having a risk to reward of 1 to 3 puts the odds in your favor. What do I mean by this? I'm talking about you having more losses, but still breaking even, still being in profit, even though you had more losses. So the example is, if you was to flip a coin, because trading is the same, there's just buy, sell, win or lose. So if you flip a coin, heads and tails. If you're gonna lose £10 if it lands on tails or heads, let's just say, and if you're gonna win £30 if it lands on the other side. So let's say £10 loss if it's heads, £30 win if it's tails. You can land on heads 7 times, you can land on tails 3 times, and you're still in profit. 7 times 10, 70. 3 times 3, 90. So you're still making profit even though you had losses. And this is what casinos do today. They don't care who wins, who loses. They have the odds in their favor. And the odds are the people playing. They just need a certain amount of people playing. That means they make profit no matter how many people win or lose. So we too can do the same thing. Put the odds in your favor, have good risk management. This is how you're not gambling. This is how you're not just speculating and, you know, just fluking it through the market. Move on to the next slide now. So the chart moves in 3 different ways. There's uptrends, there's downtrends, and then there's sideways consolidations. When the market is trending up, whatever currency pairs you're looking at or stocks or indexes, what you want to do is you want to come into these lows right here, and buy. You want to buy low in an uptrend. In a downtrend, there's going to be highs. And what you want to do is you want to sell high. It's just like if you was buying a house, for instance. You want to try and buy it when the price is cheap, hold on to it, and then sell it when it's high. So in Forex, if you press buy right here and price goes up, you've made profit. As long as you close that trade when it's here, you've made profit. If you press sell right here and price goes down, you've made profit and you just need to close the trade. Consolidation sideways, we don't know what the market is going to do. We got to wait until we either see signs of an uptrend or a downtrend. Patience is very key in trading, man. Patience really pays. Delayed gratification. Patience pays and delayed gratification. Now, MetaTrader 4 is the platform that you use to place your trades. You can have a demo account where it's the real market but not real money, or you can have a live account when you're actually placing real money into that account. And you need a broker to deposit money into that brokerage account so you can then go and trade on MetaTrader 4. And TradingView is a website or an app that you can use to do analysis, to analyze patterns and trends, to look at the charts to see where you can get into a profitable buy opportunity or a profitable sell opportunity. All the analysis is done on TradingView. So MetaTrader 4, for placing your trades. The broker allows you to deposit money so you can then go and place your trades on MetaTrader 4. TradingView is where you will do your analysis. Hope it's all making sense. So this is just a small example of, you know, you selling high if you was a trend trader, for instance. It's just a basic strategy that one could incorporate just to see how the market is trending. So there's something that's known as support and resistance, floor and ceiling. The best way to explain it is resistance is the ceiling. We can't go above the ceiling. Support is the floor. We can't go below the floor. So as you can see, market has been respecting this slanted trend line, this slanted ceiling, resistance. It respected it here. It respected it there. When there's 3 touches on the trend line and then you see the floor has been broken and they're retesting the floor as a ceiling in terms of the market, it's a chance for you to get into a sell opportunity. Now on this trade, it was a risk reward of 1 to 3, and you would have made around either £7, £70 or £700, because that's where we actually got the pips from on the previous slide. It was from an actual example of what happened in the market. And this right here is also the market respecting support, the floor. Then we have an uptrend. So as we can see that there was a lot of, this was a strong area of support and resistance. This is ceiling. Price didn't go above it. Ceiling. Now, price broke the ceiling and retested as the floor. Now it became support. And we have here the trend line, a slanted floor. It was respected once, twice. The third time is when you can pull the trigger and boom, you could have got in for a buy and made around 90 pips. So if it was 0.01, that's £9. 0.1, £90. A standard, £900. Hope is kind of making sense. So this was a downtrend, selling on the third touch of the trend line, the resistance, the slanted ceiling. Then we have uptrend, buys. On the third touch, it becomes a kind of strong area of a trend and support. So you can get in for a buy right there. So if you want to know more information about trading, you know, have a support system, have mentors, find out what other strategies there are, find out a bit more information about Forex, just give me a message on my Instagram mastermind. I'll be very happy to have a conversation with you. Thank you very much for your time. I'll be giving out some more free value during the weeks to come. So just look out for my videos. Thanks.